I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
Both the Toronto Stock Exchange and the exchange in New York at record highs. What's behind it, and is there any kind of warning or message?
Yeah, this is pretty amazing. Stocks by most measures, at least in the U.S., were overvalued 3 years ago. And they've kept on going up, which is the nature of bubbles. You know, they reach a point where you look at it and apply rational historical measurements to their level, you know, whatever they're doing, and say this can't go on, therefore, you know, it's time to sell and or short this market. And then it keeps on going. Rational investors tend to get crushed in the later stages of bubbles because it becomes, you know, historically rational to short this thing. And it just keeps on going. So, yeah, we're at that point now, which we were at in 1999 when tech stocks had one last doubling in them, or 2007 when housing and banking stocks went up from historically overvalued levels for another year. We're there again. And by every measure in the U.S., stocks are at levels that in the past have preceded huge crashes. And yet, here they are, up again today. So it's hard to say where this ends or what ends it, but I think it's safe to say that it will end in the not too distant future, and the end will be pretty horrific. One interesting measure that I hadn't seen, at least prior to it being published on Zero Hedge, was how many hours an American has to work to buy the S&P 500. In other words, what are stocks like relative to wages in the U.S.? And they peaked at an extraordinarily high level in 1999 during the tech stock bubble, when stocks were just going insane. And they got high, but not quite that high, before the 2007-2008 crash. And now they're back up to 1999 levels, that measure. So what that means is that when stocks have gotten this expensive relative to the money that the average person makes, in other words, the ability of the average person to buy stocks, they've crashed in the past. And what's different about this time around is that you've got these big new players in the market. You know, the central banks of the world are actively pushing up stock prices, either directly by buying them, like the Swiss central bank or the Japanese central bank, or by pushing interest rates down to artificially low levels, which makes stocks look better, relatively, as in the U.S. You know, so you've got these big new whales in the market, the world's central banks, which implies that since they've got basically unlimited resources, they can print as much new money as they want to, and if they're going to use that to buy equities or otherwise make equities more attractive, maybe historical measurements of valuation don't matter anymore. So we'll see. You know, that's the kind of thing that takes hold at the tail end of every bubble. People start saying, well, this time it's different. You know, the old measurements don't matter anymore. So because of that, they can keep on going up from here. That's never been true in the past. Every single time it starts to seem like this time it's different, and there really is no end in sight to the bull market. That's when the bull market ends and turns into a monster bear market. So I don't know, Jim. We'll see. It certainly feels like we're at the frantic end of yet another financial bubble. But of course, I would have said that 2 years ago. So this is one of those things that makes its critics increasingly humble and quiet. And then when they are all silenced, that's when it'll pop. So I don't know. But, it's in the context of a very interesting world. The politics in the U.S. have just gotten amazing lately. And I will say, though, that Trump and Trudeau seemed to get along pretty well when they met. And Trump's daughter seemed to really like Trudeau. There were a lot of pictures on the internet with her staring longingly at him. So I think our two countries have a really interesting political future in the short term here.
Yeah, I noticed that in all the photos taken at the White House. All the women, though.
Yeah, that's just the nature of being a good-looking young politician. Huh?
And, of course, though, Trudeau's visit was overshadowed by the resignation of Michael Flynn and was hardly mentioned in the U.S. media that he was in town. Sean Spicer, the press secretary for the White House, called him Joe Trudeau as well.
Well, that guy seems to get a lot of things wrong, so that shouldn't be too big of a surprise. But yeah, the Flynn thing is interesting and possibly has legs, because it turns out that first of all, that he was, as a security advisor for Trump, he was meeting with the Russians all along during the campaign. And according to reports of the transcripts of some of those calls, since we bugged the Russians, so we, our spies got to listen in on those phone calls and other conversations. And, Flynn was thanking the Russians for helping out with the Trump campaign and promising to get rid of the sanctions that Obama had imposed. And this is before the Trump administration took power, which means that's borderline treason. When you're involved with a foreign government that we are in some kind of a spat with, and you interfere with the process of our government dealing with that other government, that's some sort of a crime. It might be treason, but it might be some other things that are less serious, but still pretty serious. And to the extent that the Trump administration knew that this was going on, some other people are probably culpable here. So we don't know how far this is going to go. And we also don't know exactly how the machinery of finding the truth and assigning blame is going to work, because normally it would be the Congress that handles stuff like this, but that's in control of the Republicans. So it's not clear that they can be objective, but it's also not clear whether anybody else has the power to take the investigation away from them. So, what is it, 3 weeks into the Trump administration? We've got major scandals with the possibility of it going all the way to the top. This is a little sooner than most people expected, although I think most people expected a lot of conflict of interest kinds of things to bubble up in this administration. So here we go.
Well, I believe Trump is meeting with retail CEOs today. And, my joke question, but maybe it's not a joke, is he pleading with them to pick up his daughter's clothing line after it was dropped by Nordstrom's?
Yeah, or to go in with him on some mall projects or something like that. You never know what they're going to be talking about. One thing they are going to be talking about, though, for sure, is that the retailers are in favor of free trade and don't want NAFTA, for instance, to be renegotiated. So they're going to try to talk Trump out of that. But and in any event, it's not clear how we renegotiate free trade agreements. That's a new one. So this is uncharted territory in a lot of ways, and I think there's going to be a parade of corporations going to see the president to try to make sure that he doesn't do anything to hurt the special privileges that they've managed to carve out for themselves over the decades. Big U.S. corporations have devoted an awful lot of lobbying and a ton of money to buying themselves a really favorable environment. And to the extent that any of that is threatened, they're probably terrified, and they're probably kind of frustrated too, because buying one Congress doesn't imply that you've bought the next one or the next president or anything. And so it's probably frustrating for a CEO to have to keep going back and buying new politicians year after year, I'm sure they wish they could just buy some guys who would stay bought for decades instead of, months or years.
Well, Trump's tweets, too, do directly affect the market. When he said the new Air Force One was too expensive, Boeing shares fell. When he said the F-35 was too expensive, Lockheed Martin shares fell. Does he know what he's doing with the market when he makes these tweets, or he just doesn't care?
Could be. He's using it as a tool to extract the changes that he wants from the targets. You know, corporations in the U.S. now are setting up war rooms with contingency plans in case they get tweeted about by the president. So they're going to have guys with plans in place to do damage control if Trump says something mean about them at 4 o'clock in the morning on Twitter. This is so new, and it's great for comedy writers, and it's interesting for political writers and finance guys because it makes the markets bounce around and everything. But I don't know what comes of it in the end. You know, so many things are very important and seem to be taken really lightly right now in the U.S.
Well, Trump's biggest complaint about the Flynn affair was that the media found out about all these things and reported it. And he's saying we have to plug these leaks. It's illegal for the media to talk about this stuff.
Yeah.
Well, he seems to forget about the right in the U.S. Charter to freedom of the press and freedom of speech.
Mm-hmm. Well, see, that's the consistent response of politicians to unpleasant news coming out. They're mad at the leakers, right? The news itself is way less important to them than the fact that somebody leaked it. That's what the Democrats felt about WikiLeaks posting all those DNC emails, even though the emails themselves were really incriminating, but the Democrats were mostly mad at WikiLeaks for posting the things, and they're mad at Russia for hacking the accounts and sending them to WikiLeaks. And that's kind of a normal response. You know, you're mad at the guys who exposed you rather than mad at yourself for the material that has been exposed. And Trump is no different in that sense. But, hopefully things kind of calm down and get consistent here because, especially in terms of foreign affairs, this is important. You know, we've got planes buzzing each other, U.S. and Chinese, in the South China Sea. And an accident can happen very easily where one shoots down another, and then the side with the plane that got shot down feels the need to escalate. You know, this is dangerous stuff. Same thing with Russia. We apparently had a dangerous flyby between U.S. and Russian planes over the last weekend. And that's the kind of stuff that if you all aren't very clear with each other and communicating in a coherent way so you can talk about this stuff before it escalates, that's very dangerous. And it doesn't seem like that's the case right now. It seems like we're, in a lot of cases, trading insults or cutting back channel deals that are either illegal or would be really incriminating if they were exposed. So this is the kind of stuff that ought to be spooking the markets. That's one of the things that's strange about the financial markets right now is they seem pretty happy, even with all the uncertainty, even though a lot of that uncertainty could cause them big troubles in the future. So I think that on the one hand, and at the same time that the Fed is getting ready to raise interest rates in the U.S., which is normally a harbinger of a bear market. You know, when the Fed shifts gears from lowering rates to raising them, that's usually, historically, a sign that the financial markets are going to react to that after a couple of increases. It doesn't happen with the first Fed rate increase, but as rates start to go up and people start to extrapolate that trend into the future, you get financial markets recoiling a bit because they see the value of, for instance, stocks and bonds going down relative to, say, money market funds or something like that. So money starts flowing out of riskier financial assets and into safer ones, and you get bear markets. That isn't happening yet, but that's also an underlying trend that has historical precedent that we should be paying attention to.
We'll have more with John Rubino right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with John Rubino. John, we know China and Russia have been buying all the gold they can lay their hands on the last 5 years. At the same time now, they are selling off U.S. treasuries. What could be behind that move? Is this China's strategy to put the yuan in contention for the reserve currency of the world?
Well, as other countries accumulated a lot of treasury bonds, there was always this question of what would happen if they got out, and you know, a question about whether they want to get out, because that creates a huge risk. If you own, let's say, $3 trillion of fairly long-dated treasuries like China did at one point, you've got a huge risk there, because treasury bonds are historically pretty volatile, and you're buying them at fairly low interest rates now, which means fairly high prices. And so you could be looking at a massive loss in your foreign exchange reserves if the dollar falls, and that takes the value of treasury bonds down with them. So people have always wondered what China was going to do, how they were going to get out at some point. And the last few years of an extremely strong dollar and extremely low U.S. interest rates have given China in particular a really good chance to lighten up on their dollar holdings. And that's what they've been doing. They've been selling their treasury bonds at extremely high prices, you know, historically high prices in which they have a big gain because they bought those treasuries during the bull market in treasuries. And they've been using some of that cash to prop up the yuan, which is under pressure for other reasons, you know, because they have a credit bubble going there that's bursting. And some of that money they've been using to buy gold. One stat came out this week that said that during the past year, China imported 1,600 tons of gold, which is more than half of all the gold that's been produced by gold miners in the past year. So if you take China's buying and Russia's buying and India's, you get pretty close to all the gold that's being produced by gold mines around the world, just from those three countries, which means anybody else buying gold must be getting it from somewhere else, right? And the implication is that major Western central banks are continuing to dump their gold holdings on the market. So we've got this huge flow of gold from west to east, which at some point implies that that the Eastern currencies, primarily the yuan, China's currency, will be seen to be backed by gold to such an extent that it becomes a lot more valid as a reserve asset and as a trading currency than it is now. In other words, Chinese bonds will be seen as something that Great Britain or India or Venezuela or somebody can own as the core part of their foreign exchange reserves to prop up their own currency. And when that happens, I mean, it's a good thing for China, obviously, and it's a bad thing for the U.S. because we lose power relative to the rest of the world if the dollar is no longer seen as the central reserve currency of the world. And if it comes out that a lot of our gold has been shipped to China in the last few years, something like that might happen. Because you look at our numbers in terms of the amount of debt that we've taken on and the Federal Reserve balance sheet, in other words, the amount of currency they've created and dumped into the market by buying bonds, it's not pretty. We are not a financially stable country based on our numbers. But the dollar is the world's reserve currency, so everybody wants dollars right now. And so we kind of have the glow of that reserve currency making us look much better than we really are. But you take that away, you know, you make the dollar just one of several reserve currencies, with the yuan possibly being its equal. And then all of a sudden, we've got to get by on our own fundamentals, and they're not pretty, and they're not getting any better. You know, the Obama administration, we doubled the federal debt. Under the Trump administration, based on the big infrastructure and defense build-up plans that are now on the table, we're going to borrow a lot more money. So if the federal government, for instance, adds another $10 trillion in the next decade, at some point along the way, it's going to become clear that we owe an insane amount of money, and the dollar can't be held stable if we ever intend to pay that money off. We're going to have to cut the value of our currency. We're going to have to devalue really aggressively in order to cover our debts. I'm surprised that the markets don't think that now, because the numbers are already overwhelmingly bad. But as it continues, at some point the world comes around to that conclusion that the U.S. is functionally bankrupt. And without devaluing the currency by, say, 50%, we aren't going to be able to pay our bills. So the dollar will start to fall at that point. That's the dollar collapse scenario that that I named a website after in 2004, and that has not happened yet. But as the numbers get worse and worse, it's still out there waiting to happen. And based on current trends, it wouldn't be a surprise if it happened sooner rather than later. So China and Russia and India, the countries that are buying lots of gold, are part of this story because they're strengthening the basis of their currency while we're weakening ours. And at some point, the relative trends, the conflicting trends of them adding gold to their reserves while we're simply printing new dollars year after year after year, those trends become apparent, and people start shifting their finances away from the weaker fiat currencies like the dollar and the euro, which is as badly run or worse than the dollar, and into currencies that are better run, like the yuan, or flat out into gold and silver. A lot of people are going to just start buying precious metals because they see that as the place you hide out when fiat currencies are so badly managed that they start to blow up. Historically, this has happened over and over and over again. Never on this scale, but countries have been destroying their currencies since the beginning of financial time. And every single time, without exception, saw the local currency that was being mismanaged go down in value relative to gold and silver. So people are figuring that out. Individual demand for gold and silver coins is at record levels right now and rising, which implies that people get it on some level. And over time, they'll get it on a more extreme level, where when you get your paycheck, you immediately convert it into something real, like farmland or rental property or gold and silver. When that really gets going, it's going to be hard to stop. And it's in our not-too-distant future, I'm fairly certain, which means for an individual who can't do anything about the politics of this world or the big financial trends, there is a chance to protect your family from all of this by buying gold and silver. And I think that's what a lot of people are doing, and I think the people who are doing it now will be glad they did a few years hence.
John, thank you so much for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.